Okay, so again, it is April 1st, 1 p.m. in New York, and let's get started with the midweek strategy webinar. I have a couple topics I want to cover specifically today, specifically some April seasonals. There's some really interesting seasonal tendencies for the month of April across several currencies, so we'll get into that. We're going to look at yen crosses. There's some setups that are shaping up, bigger picture setups shaping up, it appears in yen crosses. Then of course I want to talk about dollar CAD. That was, kind of the first idea really that we were looking to do here in April. Unfortunately, the short trigger or the entry price was not hit overnight. We'll get into that and see where we might want to try to get in next. Look at pound a little bit. Yeah, all right, so let's begin. So as you know, I was still publishing, of course, the swing update every day, but over the last week, but I was away, and it's always good to get away, kind of when you're trading. It's always good to take a little break. Even though I was still obviously on top of the markets, I wasn't as on top of the markets, right? So I wasn't sitting there with so much screen time every day, and it really drove home the importance, I think, of of doing just that, of kind of stepping away. I mean, we had some really good trades last week with the Aussie, euro yen. We did have a euro dollar short, and I think we were right to turn bearish euro dollar, but the ended up getting a break-even stop on that as the the market that one day popped up to 110.50 and then fell apart. But it really drove home the importance of studying the swing setups, right? Studying the daily, the 4-hour, the hourly charts, identifying the levels, putting the orders in, and letting the market do its thing, right? Rather than sitting there and trying to make the market do something. So always important to step away for a little bit and remember that. So here's the dollar CAD. This is the daily chart, just so you can kind of get a wider view, right? Now, since January, this is the January last day of January right here, we've gone sideways and wrote this exact thing last night, but look, is this a broader topping process, okay, in dollar CAD? Is it a broader topping process, or is it simply consolidation before we get another leg higher? Look, there's just no way to know, all right? From an Elliott wave standpoint, this could have been triangle right here, okay, from basically throughout all of February, and then March this could have been a terminal thrust. This very large reversal bar here, okay, on March 18th, of course. We have nice slope to work with. You can see this pitchfork. This is the one I'm working with on the bearish one. Okay, January 30th high, the low on, what is that, about February 15th, I believe. And, of course, the high for the move on the 18th. Very good description of the median line, or the median line, I should say, describes price very well. You've got, 1, 2, 3, 4 spikes below it, close above it. And sure enough, when we came back to the upper parallel here just yesterday, the market did indeed put in a reversal bar of its own. And we've sold off, now, well, not quite 1% today. But looking towards, at least in dollar CAD, towards 124.80, okay, which is daily reversal support. That's the close here from the low day of the move last week, which would be 26. All right. So with dollar CAD, we're looking at the short side. Look at an intraday chart now. Same exact levels that you've got. It's got a little more stuff on here, though. This, if you can see it, it's very grayed out, if you will, because I don't want to accentuate it too much. But at this point, we could get some support before 24.80. The former highs back here, so about 25.40 from last week, the 25th. I guess that was last Wednesday. 25th, we are sitting right on lower parallel from an older structure, but these old structures often come back into play, obviously. So you could get some support near that 2540 region. At this point, I'm thinking that we'll probably be looking at a short attempt near the, let's see, what was this, 26, I wanted to go more, probably 2650 area, which was Monday's low, or was it, my days are all messed up. I guess it was Tuesday's low, was 2651, and then, obviously the new month just started, so 2652 would be the month open, okay? As you can see, we've already come back into the week open, so dollar CAD is unchanged on the week here, but we'll be looking at the 2650 region, as a kind of an ideal area to try to get short with a stop up above 2710, which is today's high. Okay. Another thing that you can do, and I've referenced this before in the past, but when you do get, you kind of have a reversal, and this is an hourly chart, and the two lines on here, the red one's 120 moving average, 120 period, so that would be 120 hours in this case, and then this one is 24 hours. So what you've got in effect there is a 1 day and 5 day rolling averages, and what you can do when you're trying to catch a reversal of sorts off of a price extreme, which we're obviously coming off a high here within a range. The moving averages are not aligned obviously at this point. What you can do is try to trade into, if you get the touch, say on the 24-hour moving average, right, and try to get that first touch as resistance. Now it might be that we never get triggered on the way down and that we actually end up getting the support, in which case we might actually try to get a short-term long at some point, right? But if that were to happen, what we might end up doing is getting a bigger swing short opportunity in the making. So if we were to say get 5 waves down from here, right, 1, 2, 3, 4, 5, get a corrective advance, find some support at some point in the future to provide resistance, right? This could still come into play at some point. We could get 2680 at some point. That would be potentially on Friday with NFPs, which was yesterday's close, 2680, right? So just because we didn't get triggered at 2729 last night, no worries. I thought we had a good chance of getting triggered though, and here's why. Besides the fact that 2729 was the hourly close, I was checking the market a little bit last night. So, during Asia, we kind of sold off a bit down here, right? This was going into after Asia closed, but dollar CAD was trading down into this region and saw us turn up a little bit. So I drew a fib and I was like, oh, 2729 is also the exact 618. This will be beautiful. Well, we got a really shallow retracement, so we didn't even make it to 50%. In any case, the downside is going to remain favored probably until at least 2480, and depending on how this thing unfolds, the structure of it, that is, if it's, if we go in a 5-wave drop, we could end up getting a much larger swing trade short opportunity. And with that, I want to bring in the seasonality studies. So I said one of the first things in the webinar I wanted to do is go through the seasonals, right? There's some very interesting seasonals that stick out. So you're obviously all familiar with the chart here on the right. This lays out basically the, the average path, okay, of the, of the instrument that we're looking at over the last 5, 10, 20, and 30 years. Obviously, not all the data is there for some of them. Like for the euro, we don't have 30 years of data, right? Because the euro came into existence, in the late 90s. So we don't even have 20 years of data, but the dollar index we do. So we've got all the data here. This chart on the left, these histograms, this shows the degree with which the market tends to move that month. So this is 5, 10, second row down here. Third row down is 15, fourth row down is 20, fifth row down is 30 years. Okay, so you can see on average that month, if it's a longer bar, okay, regardless if it's up or down, okay, the longer it is, the more intense the move tends to be that month. So this being the fourth month, this is April right here, okay, very interestingly, across all the time frames we're looking at, this is the dollar, 5, 10, 15, 20, and 30, every single, time period, the dollar is negative, okay? And in fact, for 5 years, it's actually the second most bearish month behind June. Basically, April and June, the dollar tends to really suck. For April, it's very consistent across all time frames. So, that's obviously of extreme interest right now, given the fact that, the dollar's been, king dollar, right, for quite some time, and we've come into some really big levels across a number of crosses. So when I see something like a dollar CAD setup, like we had here last night with this confluence, or yesterday I should note, it does get me pretty excited about getting on the short side of the dollar. All right. When you have that additional information behind you, okay? So important to keep that in mind as far as the dollar is concerned. Let's look at some of the other specific pairs. Oops, let's see here. Specific pairs we've got. I would like to look at this. Okay. All right. So the dollar is very negative as we head into April. Let's look at pound dollar itself. Pound, as you can see, the exact opposite, right? Every single histogram for the 5, 10, 15, 20, and 30 years is positive, okay? I will address questions, by the way, towards the end, just so you know. But 5, 10, 15, 20, and 30 is positive. So pound, very positive month typically in April for the British pound. Okay, and obviously from looking at the chart that you're used to looking at, we can see that as well. In fact, pound tends to rally, and there's a tendency for it to rally into at least the week of April 24th, and more recently into the entire month, okay? So with pound, extremely positive. So we'll be on the lookout for, pound long setups as well, which I touched on a bit last night. Let's look at Aussie. Aussie tends to have pretty positive bias throughout the month. You can see across 5, 10, 15, 20, and 30, okay? So all time frames. Kiwi, also positive throughout all time frames, all right? Dollar yen, it's negative, but it's not extremely negative. Again, the tendency, as we've talked about previously, is for the British pound to, is for the dollar yen to top, in this first week of April as Japan goes into a new fiscal year, okay? So, the seasonal bias basically after this week is negative, although it's not like a straight line down or anything, like some of these other, pound dollars, like a straight line up, for example, over the next couple weeks. But dollar yen, yes, the tendency is for yen strength, dollar yen weakness after this week. And finally, of course, dollar CAD. This will be published. Yes, Sandy, this will be published. And the tendency for dollar CAD, extremely negative throughout April, as you can see throughout the seasonal chart here. Very, negative typically up until the week of April 24th, and more recently, much more negative throughout the year. So So we have, you know, bigger picture seasonals here. You know, dollar bear setups, obviously of heightened interest, I should say. All right. All right. So we took a look at the dollar CAD. You know, we want to be short dollar CAD. You know, again, we'll be scoping out for levels to, you know, sell any strength. You know, we'll wait for the day to end here and see if we can get, you know, an entry at some point tonight or tomorrow. If not, look, we've got NFP on Friday, so it's quite possible that, you know, we get some whipsaw action. If you get a spike into 26.80, it's very possible we could end up getting short at some point there next week. Don't forget, too, that Friday, it's going to be interesting Friday because we have NFPs on Friday, but we also have, you know, the markets are closed. NYSE is closed. You've got futures, S&P futures and CME, I think, are open until like 9:15 or something. I mean, they're only open for a very short while. Europe is closed Friday as well as Monday, you know, Good Friday and everything, and Easter. So not sure what the NFP reaction is going to be like on Friday, but there's not going to be a whole lot, you know, to do Friday trading-wise, I would think, after that report comes out. Sometimes you get a pretty good Friday trading day after NFP. I'm not sure that's going to be the case here. All right, so we've got dollar CAD, which we're going to be looking to get on the short side over the next couple days or a couple weeks, depending on how it plays out in the near term. Pound dollar, we did make a slight new low today, so I'm glad I didn't put a long order in last night, because if I would have put it at probably 47.95. I probably would have put the stop right down here at 47.50. Would have ended up eating a stop, and it would have really sucked because we would have been right back up to, you know, where we are now, which would have been in the black, but we would have been stopped out. In any case, following two slopes here, we still have bearish slope right here. A lot of trading around the median line, okay, but it's not precise as far as support resistance is concerned. But what I note, which is interesting, is that, you know, median line analysis is as much about understanding how the market trades around these levels, right? So look at how we traded around it for, you know, quite some time, really over the last week. The market would trade deep below the median line, never make it to the lower parallel, but it would trade deep below it, deep below it, deep below it, okay? A little higher, more or less on it. The last rally we got resistance almost precisely, very precise, I should say, almost right at the upper parallel. This latest decline last night, although sharp, did not reach the median line, right? That's a very slight, very minor behavior change, okay? Tells you that the market might be changing its tune, okay? So right here you do have the market turn up before where you'd be looking for support, right? And now we're getting close to resistance again. And what we have here is, again, this is in gray because I don't really consider it qualified yet. We haven't really touched a whole lot of these levels yet. But what you want to look for now is if the market were to trade, if pound dollar were to trade up through here to break resistance, right? And by break it, I mean like trade above it for, say, a session, you know, like 4 hours or so. And I don't mean like trade above it for, you know, 5 minutes, but trade above it for, say, you know, several hours. What you want to do is you want to see then the market hold above, and you want to see at this line then eventually come into play as support, okay? That's what you want to see. So if this were to come into line of support, you get a confluence, which is always the best trade to make. This area here happens to occur tomorrow morning, right, around 8 a.m. New York time. So, you know, we could end up getting, you know, a long opportunity in the British pound, you know, near the 48.20 figure or whatever. So, you know, would not be surprised to see pound higher overnight, in which case we would be looking for any sort of pullback, ideally to find some support at old resistance and to qualify this slope, work with some new bullish slope potentially to get long, you know, pound dollar for what could be quite a sizable swing. All right, just to give you an idea, You know, if we look at the daily chart, for example, of the British pound, I mean, look at this thing. So we have the absolutely insane dollar reversal on the 18th, right? Fed day, whatever. You know, pound dollar takes out pretty much everything on both sides of the market. Since then, we've had more, you know, alternating up and down days for the most part in a really, you know, more or less horrendous range. I'm really glad I have not tried to trade the pound, you know, because the market's just, it's been more or less extremely random, okay? We have had that slope I showed you here in the near term, but even this, you really wouldn't have had too many trading opportunities on it, maybe except for, you know, this one really yesterday, or that was this morning in Europe, but it really would have been the only one, at least the way I look at things, that you could have gotten. So not a whole lot going on as far as good opportunities in the pound, which means there probably is a really good opportunity now, right? Because everyone's really sick and tired of the pound, and they've been screwed by it, and they're like, screw this, I'm giving up on the pound. Well, this is the time to look at it, because now you're going to get a straight line move one way or the other, okay? So when we look at that, let's say makes two equal legs here. We would go from here to here. That gives you 100% up at 52.40, 52.39. And lo and behold, this is the year's range more or less. 50% of the decline from the February high, which is more or less the year. Okay, the year's high is the open at this point, which is 55.78. The 61.8 level comes in at 152 even. So we could end up getting a rally from, you know, 49 to 52. We're talking 300 points on the upside until we get resistance, you know, slope and also Fibbo, okay, up near 152. And at this point, we're looking at risk of, you know, not even 100 points here, but, you know, we'd probably be looking to get long around 48.25 or so, more or less where we are. But we want to see the market act a certain way, stop. You know, would probably try to get a little tighter than 47.30, but you know, we'll see. In any case, you have to like the pound dollar potential here, okay, as this is a massive reversal bar and then a terrible consolidation that eventually likely gives way to the next impulsive move, thinking it going to be on the upside, but we'll see about that. All right, so like the pound idea on the long side, just got to wait for the right trigger, if you will, the right characteristic, the right behavior in the short term. And then also like the dollar CAD on the short side as well. With that, we just kind of have to wait for the right levels to get the right risk profile on the short, okay, on the swing short. So that's where we are with two of my favorite dollar crosses at the moment. We'll look at Aussie and Kiwi. Now, if I scroll out here on the Kiwi dollar chart. Okay, so remember we had identified the slope some time ago, right? Remember this one? It broke above here, and I thought maybe it was a big behavior change. Well, it was, but it was a false breakout because we came right back into it. And false breakouts are usually pretty gnarly on the downside, you know, as they reverse the reversal, so to speak. We ended up, you know, we didn't get short Kiwi, but we did get short the Aussie, which was nice. In any case, what we've got here is, you know, this morning's low came right in at support, so that's interesting too. Now, I think there's actually better support, slightly lower. You've got a confluence of levels which could come in play really any time between now and at some point next week. What's the 9th? The 9th is actually next Thursday, so could come in really at any point between now and next Thursday, down near 73.60. 73.60 is the daily reversal support. That's the level down here, you know, the reversal in early February. That was the close of that day. I think that might have been RB and Z, but not positive. In any case, you've got the confluence of horizontal, okay, as well as slope and several slopes in both directions. So, again, while the median line in this case, is not all that great as far as support resistance, this is the line that is the one that actually provided support today. It's always good to be able to buy in an upslope, regardless if if you have it, qualified or not. In this case, I would consider this as a decent upslope to look at because, excuse me, the slope in this case with the sliding parallel, you actually ended up getting some good action around it here. Okay, again, it's not always the median line that's all that important. It's the parallels around it. Okay, in this case, this parallel, this point here, this parallel was very precise on 3 instances. So perhaps we trade up to sideways a little bit and end up finding a low down here next week. I don't know. We'll see. Either way, just be aware of 73.60 as a very important level in Kiwi. It could really provide support for along the very high reward to risk ratio. And again, don't forget the seasonality is quite positive for Kiwi throughout the next 3 weeks or so. Not saying it's the best trade out there, but still a possibility. Now on the short term, not to say that there won't be a short either, right? Say 73.60 is, there's 100 points down, okay? I would still pay attention to this level up here as resistance, the red line, okay? As you can see, the median line, lots of trading around it, fairly precise as support at times. And in fact, the recent activity just last night, this spike down here, this tells me that the downtrend on the very near term actually might be gaining some steam. All right, so what you look, because it was much further down below where the previous lows were with respect to the median line. All right, so what you look for now is you look for resistance up here, and if we get up there, you look for it to hold. All right, so just see if we have anything horizontal, if you will. 75.20 could be interesting. Let me pull up Kiwi dollar on some momentum stuff here. 24-hour high is 74.90. 75.40 is interesting. Might be 75.40. You got the 120-hour, which is a 5-day average, currently at 75.29. So that would obviously probably be a little lower once we got there. We're getting a lot of momentum sells here, as you can see on the coming. As we dip lower, each rally is on the hourly chart. Each rally is, RSI is, below the 60 figure. That's what these red dots are here. So we're getting all these momentum sells. These aren't necessarily precise buy and sell levels. They can give pretty precise buy and sell levels, but I wouldn't go by it like as a system by itself. I'd rather actually, use it to tell me what the momentum profile is. In any case, if you're trading this at home, which you probably are, then what you want to do is watch for resistance at this red line wherever it may be. Okay, and if it overshoots a little bit, it's not the end of the world. You just don't want the market to spend a whole lot of time outside of it. So, I myself will probably be watching for resistance overnight in Kiwi. Have more on that, obviously, in the report later. But probably be between 75.20 and 75.40 for Kiwi dollar. So, $75.55 is the week open. All right. Okay, Aussie dollar holding its own today. In fact, Aussie dollar another thing that allows you to I think do better. Remember I'd forgotten about this slope, and identified it last week. Again, I'm glad I did, because that's why we got short up here. We were literally able to short within, we got 75.75 with a 30 pip stop. And that, by the way, a 30 pip stop, if you're risking 2% on a trade, I mean, you can literally go almost 7-to-1 leverage on that. And, that's giving you, our final target 76.90. So 78.75. So we're talking about almost 200 points on 1-to-1. That's 2% on 1-to-1. You're talking about 14% just on that one trade. Half the position, it would be 7% just on that one little trade. Okay, so that's how you make money in trading. Is there's several times where you can really put on a position with a very tight risk, right? And that's what allows you to put on a bigger position. Okay, that's the idea. There's going to be a lot of times you're going to get a lot of small gains, a lot of small losses, a lot of 0.5% here and there, some percents here and there, and then eventually, you get to hit something pretty good. And that's what we were able to do with the Aussie dollar here. So again, with the Aussie, still you want to follow this slope, continue to follow it. It's going to be I think this little slope here is really the key to following what's going to happen for the next big move in the Aussie. Because let's say we even get to a new low, okay, but let's say that the low occurs somewhere like right here before the lower parallel, and then you reverse higher. That's going to be a really big sign that the Aussie dollar's really changed its tune, okay? Because that would give us, again, a raised floor along what's been an extremely precise parallel. You can see how clean these highs are right on this thing, right? I mean, lows right here, throughout here, strong here, okay, through the bottom, but another low right here in March, okay? So this has really identified a number of really important turning points in the Australian dollar. So, if we get a raised floor, that's one thing. You break through the top of this thing, then it's really on for the Aussie, and that probably sends it a lot higher, probably back up towards the year open, which is 82, which obviously would be quite a move. Even if we were able to identify this at some point as breaking through and then get support on it, give us like a move towards 81.80, it could be a beautiful setup. So we'll be watching for that to put on a highly leveraged position at some point with a very tight stop as well. Okay, but getting a little closer to home with the Aussie right now, as you can see, we have put in, is it an outside day right now? I can't tell. No, not an outside day, almost. A pip shy of yesterday. But we're putting in, I guess, perhaps a doji. We'll see how the day ends down here. Right on daily reversal support, 75.95 was the close, the daily reversal support from 311. So Aussie's very, interesting to keep an eye out over the next few weeks. Again, the bullish seasonals, something you don't want to forget about if we start to get constructive price behavior. In the near term, though, I think I put that up this morning. Look, we still have bearish slope to work with. You have this really short-term bullish slope to work with, but I'd be watching this for potential resistance either up here around the 77 figure, happens to come in, what's that, tomorrow after Asia. So maybe there's a sell in Aussie going into NFPs potentially, or later on. This is actually right before NFPs, but we'll have to see how it plays out. Bottom line here is we do have strong bearish slopes still, so getting short Aussie another time for maybe another drop is not out of the question. Okay. So as you can see, there's a lot of difference between what's going on short term and near term, and you can't really get married, to a really big picture idea until it's totally set and ready to go. Okay, taking a look at yen. Been showing this same chart for some time, right? Dollar yen ended up finding resistance last night. you know, still not totally sold on the fact that that is the high or that's it. You know, we could still get back up closer to 2065 or even 2080. It is a good sign, I guess, from a bearish perspective that we did, you know, this is a shift, okay? All this line is right here, by the way, is if you could draw this without using a pitchfork. It's that line right there, just the trend line, okay? But that line did become resistance this morning. It could still become resistance later on. You know, pattern-wise, we could have an ABC, X, ABC, continue higher and get, you know, a high at a better level, say 120.80 at some point. This, in fact, would be tomorrow morning. There's still daily reversal resistance up near 121.13. You could get something like that with NFPs, who knows. So be open to several different, you know, options with dollar yen. 119.20 could still provide support. That's the week open as well as daily reversal support. So near term, dollar yen, probably some sort of a range. But for the larger swing, certainly possibility of us getting a much bigger short position. Again, the seasonals for dollar yen turn very negative after this week. Okay, so going into next week. And finally, I'd like to take a look at some yen crosses. And Adrice, I'll look at Euro Aussie here as well. So pound yen, again, here's the chart from the special video report I did several weeks ago. It's, you know, more or less trading around where we were, you know, where we, you know, we're looking to get out. I mean, we're getting out over up here, okay, but you know, we're trading around this level. We're still holding this bottom. This, you know, this is your this one with the red and the bold pitchfork. This is kind of your tradable, you know, your tradable pitchfork, if you will. So, you know, ideally, what you'd like to see is either sell into the median line or sell into the upper parallel, right? The upper parallel obviously will give you the best reward to risk. And, you know, with the British pound seeing very bullish seasonals, you know, throughout this month, you may get that opportunity with, you know, if the dollar is weaker on balance, you could get some sort of a corrective advance, rally, what have you, up into the upper parallel here. So, you know, as it sits right now at this moment, I don't have much to do with pound yen right here. You know, kind of, you know, stalk it, wait. See if you can, you know, get a move up into, you know, the upper parallel for a much bigger, high reward to risk short position. You know, this is the short term. This is that same. This is the same one. Okay, you can see we're getting support on the parallel here. All right. You know, if you wanted to, I guess you could try to take a short position against this morning's highs. This is a, you know, a choppy uptrend here. And it may very well just be a correction, but I'd also be aware of support down here, okay, from this lower parallel, okay. So that's with pound yen. Kiwi yen is very interesting. If we look at Kiwi yen, we've got, this goes all the way back to the December high using these three pivots. We might actually have a big bearish slope to work with here. You want to see, you know, the market rally and test resistance and hold it. We haven't had that yet. This is tomorrow night. So again, if we do get a pop in yen crosses, Kiwi yen will be one to watch for resistance after tomorrow. This is old. This is a very clean, this one here, using these 3 points. This was a very clean bullish slope. You had the 2-3 low. What's that? The 3-4 high, and then the 3-11 low. As you can see, you got support here. Okay, you got resistance at the median line, the top. We just broke that. So this old support right here, okay, you want to look for that to become resistance. Obviously, if you get a confluence, there's nothing better than that, right? So we'd be looking for potential resistance in Kiwi yen up there. Euro yen, You know, same old, same old. You know, the gray one, that's the bigger upper parallel, right? We were shorting up here around 130, 104. We were able to take this down into these levels here, which is basically where we are now, actually. 128.80. I think we got out at 128 or 127.75 for the last piece of the short position. You know, we have a 5-wave decline here at this point. I know people will talk about the overlap, but what I want you to pay attention to, and this is very important, look, overlap, don't pay attention to overlap if it's not an hourly close, okay? So you can see it with line chart, very clean, okay? So if you use here 1, 2, 3, 4, 5, all right? And as you know, I'm not one of these sticklers for like every little tiny what have you rule on, you know, on Elliott. Okay, it's one thing to see the Elliott's meant to convey a you know, a market personality, market behavior. After it goes one way a certain amount, you know, the tendency is for it to do something else, right? If you start trying to fit every little market movement into it, you're going to drive yourself nuts. So don't do that. But yeah, in any case, with euro yen coming off into these, I don't really see much to do here. I mean, we're at support here, so we could get a pop, right? I'd be paying attention to a couple levels. 129.75 is resistance, would be one. You know, it's important what happens in euro yen right here, because look, you know, if we break through here again, we might revisit the upper parallels at some point in euro yen, right? That could give you an opportunity for another short, another short. So you got old support here, 132.30. You know, that could come into play at some point, 132.30 over the next week or so, if we get it. Okay. You know, something like an A, B, C. So, you know, a lot of these things are limbo right now. There's possible setups and what to look for potentially, right? Especially early in the month, right? Early in April, new month, kind of see how the market wants to trade. It's a holiday weekend coming up, so let the setups take shape, and that's kind of where we are right now. A lot of things are trying to set up, right? Got some real good ideas as far as what I want to do, but you know, we don't have them just, you know, quite ready. The dollar CAD was ready, just wasn't triggered. So finally, here we go. So Adrius was asked a question here about euro. It says, would like to look at the swing setups. So when you get a chance, any views with how to look at your Aussie swing setup, I guess, using the 4-hour and daily charts. Right, so here is the, this is the chart right here. Okay, it's a 4-hour Euro Aussie chart. We have a short-term slope, okay, right here, using these 3 levels. Low here in March, high from the 18th, low from the 23rd. You can see you had good support on it, okay? So we're looking for resistance up, you know, near the upper parallel, and specifically was looking for it because you have horizontal former support over here in October, November, and a lot of times former support becomes resistance and vice versa. Now, it would be even better, I think, if we got it over here. Okay, because if we got it over here, that wouldn't be until next week, though. But if we got over here, we'd have, you know, you'd have the perfect, you know, confluence between 2 horizontal levels, one resistance, both resistance, but one upsloping, one downsloping, right? And this has been good resistance before. It was on several occasions. So, you know, if you're asking, you know, how, you know, there's like no set steps or anything with the setups. It's, you're looking for the best to find support resistance, ideally within the trend, okay, to get on board. I mean, the best setup is going to be finding resistance in a downtrend and selling that, or finding support in an uptrend and selling that, okay? Even if you're wrong on the trend, though, and you sell at the right level, a lot of times you can still make some money, or at least you won't lose much or any, because you can move your stop to break even. Okay, so a lot of it is just understanding the market's behavior and where it is. So in this case, look, Euro Aussie's in a downtrend, okay? It has been in a downtrend. And we look to the left, and we see the market's higher up here. We have a series of highs, a series of lows, okay? But just going short because you're in a downtrend is not good enough. You could very well go broke doing that, because if you sell down here on the breakout, without a stop, you're going to be underwater for like 400 points, okay, potentially before you're right. So in this case, what we want to do is find out where resistance is in the downtrend. In this case, again, I think it could be 142.25, 142.40 because of the resistance up here from this slope. The even better level, as I mentioned, would be the confluence of these levels up here, okay, which happens to be about 142.85 or so, 142.80, and that's the level that you want to, look to short within the trend, because you should know very quickly if you're wrong, right? And sometimes we still get stopped out, right? I mean, we've had a bunch of, you can look at the trade list, and you can see some of the stops that we took for 50 pips here, 50 pips there. We took a pound Aussie short a couple weeks ago and lost 50 pips on it, but we got stopped out right before it turned, and then it went, like 600 pips lower. So I mean, that just happens. It's kind of part of the game. It's annoying, but the market's going to be here tomorrow. If you don't use stops and discipline, then your capital won't be here tomorrow, so you won't be here to take advantage of the next setup when it happens. So over time, you practice a similar, or practice the same, behavior in your trading, and you should be okay. Okay. Now look, this could be a really big, Euro Aussie could be really interesting, right? And it might be more of a function of Aussie strength if we get this, because again, we're getting into that very seasonal bullish period for Aussie, right? The euro might just trade in somewhat of a range. The Aussie could take off, whatever. I'm just kind of, speculating here in my head, what may or may not happen, but we have what could be, and I say could be, what could be a very large topping pattern, right? Just like this was a very large bottoming pattern, this could be a very large topping pattern, right? I'll also note, back when this breakout here would have been in February of 2013, and you can see that you had basically 2 straight months of weakness in Euro Aussie, okay, before it continued in the direction of its breakout, okay? So it's possible that we have, you always got to be open to plenty of possibilities, okay? It's a weekly chart, not something you're really going to trade off of, but good for perspective. So, if we got something like that and if we ended up breaking above the level that I just showed you here on the short-term chart, this is the 4-hour chart, if we end up breaking above this, okay, or this, that would be what, near the 43.85 area, then we could get resistance all the way up here, up near 45 plus again, okay? And if that were to happen, then you might be looking for resistance up there. We'll see. Okay. Are there any other questions? Got a few minutes left. I want to make sure I keep these things under an hour. just because that way it makes sure that it records everything and publishes the sound. Stefan asks, how much do you rely on RSI when making a swing trade decision? Probably not at all. I mean, I shouldn't say not at all, but you can't have too many things in your mind when you're going to make the trade. It's always a plus, I would say, when RSI is, you have a bearish RSI profile, I should say. But without the right price levels, that's not something that, I would ever put on a trade just because of RSI alone. For example, here's dollar CAD. Yeah, Stefan, don't. I mean, again, I have RSI and I'm aware of the momentum, but this is a good example. Okay, so here's a daily chart of dollar CAD. Okay, I know where RSI is. Okay, I know that it's been going sideways for a while, and I know that, say, the last peak up here at the top was actually very divergent. Okay, in other words, RSI was well below 70. In fact, it was below 65 at the peaks up here. That's what these red dots are, little red dots. So I know that there is a possibility based on RSI alone of us, making some sort of a very important top, so to speak. So that, is in the back of my head, but when I go to like a short-term chart or something to look for entry, I'm not going to look at RSI, right? You just have way too many things to think of, and what you'll be trying to do at that point is put on the perfect trade, and you'll be like, I'm not taking that trade because RSI is here and it's not where it should be. It's like, well, you're looking at a 5-minute chart, who cares? So, I'll be aware of what's up with daily RSI. With the dollar index, for example, like I know that RSI has been above 70 since October, so it's been above 70 for, like 6 months, and, that's super extreme. So at some point there's going to be a snapback in the dollar, and no one will be ready for it, whatever, it'll be insane, but, catching it will be really, really hard. So yeah, it's, I know that the dollar is extreme, right? And it has been for a long time. So with that in the back of my mind, I'm like, well, it'd be nice to position for a dollar, sell-off at some point. So if the setups come, then I'm gonna do it. Stefan says, I have to separate Michael's scalp with my mind with what you do. Yeah, I mean, so I'm trying to, catch a couple good moves each month, but sometimes they'll put in 10 to 20 trades, right? And a lot of them are going to be small losses or break-evens or small gains, but you catch a couple of those good ones, and that's it's kind of how you make your money, at least as far as as far as I'm concerned. Alrighty then, my friends. So, quick update, or quick summary, I should say. So April seasonals, the seasonality, right? Extremely negative the dollar. Okay, very positive the pound, very positive CAD, or so I should say negative dollar CAD. Dollar yen tendency to turn bearish after after this week as Japan starts a new fiscal year. Aussie and Kiwi are positive. So look, I mean, bottom line, seasonals tell a story of dollar weakness. It's super interesting, of course, where we are in the broad scheme of things, general scheme of things. In the short term, obviously, look, everything's up for up for whatever. I'm totally willing to sell Kiwi up into resistance or sell Aussie into resistance or whatever, but would be very aware of the possibilities of behavior changes and would pay attention to them and not dismiss them if we start to see, dollar CAD breakthrough support or Aussie dollar, Kiwi dollar, pound dollar breakthrough resistance or whatever. Okay, that might be the next big trade. Okay, so we'll see. If there's going to be a bigger dollar pullback or a dollar pullback within this, king dollar run, this month is a pretty good time for it to happen given the seasonal tendencies for dollar weakness. Okay, all right, so thank you all very much. I'm going to get this up as soon as possible so you guys can watch the archive. Other than that, great to be back and more active again. So very excited. Let's have a good April. All right, take care. Bye.